strength of any investment bank is the value it can add to its clients, its principals, and all the counterparties that it comes into contact with. Our strategy from the very beginning, back in 2008, was to deliver value, which is the Greek word for Axia. Axia actually means value. So our effort has always been to deliver real value to the clients and to all the counterparties that we come in contact with. Being focused in Cyprus and a number of other countries in the region allows us to provide the perspective of a local player that understands the realities very well and can assist the global funds to navigate themselves through what is otherwise a rather difficult jurisdiction to understand. Our offering is sometimes considered at par, perhaps even better than those of the global investment banks. Has to do with the fact that we are totally focused on countries like Cyprus and also the other countries like Greece and Portugal and Italy, where we do business in the Southern European region. We generally cater to capital providers that are based in the West. So our typical client is a multi-billion dollar or euro fund that sits in a Western jurisdiction, be it a hedge fund, a fund of funds, a private equity fund, a sovereign wealth fund. This would be a typical client. They are generally looking for opportunities in a world of low returns because remember, we have seen banks reducing their interest rates significantly. Bond returns have also been going down. So they are looking for returns which would justify their investments. So the Southern European region is still one region that offers these kinds of returns, and they're obviously approaching Axia because of the local knowledge that we have established over time and the fact that we can help them navigate themselves through what is otherwise difficult jurisdictions. There's a number of advantages of being headquartered in Cyprus. Firstly, the country offers excellent infrastructure. There's availability of high caliber personnel. Tax coefficients are quite attractive. And the legal system, which is based on English common law system, is a system that our clients are more accustomed to. Over time, as Cyprus has been improving its economics following the crisis that has taken place, we are witnessing Cyprus getting more positive attention, and we are also witnessing the country's legislative anti-money laundering legislation coming at par with that of international jurisdictions. So all in all, the jurisdiction that's called Cyprus has been a positive one for us, and one that's also becoming even more positive as time passes by. But above all, being in Cyprus enables us to cater to the needs of the outside investors who are looking to make inward investments into a country that is otherwise quite small to be featured in their radar. So by being in Cyprus, we offer the advantage of an investment banking boutique that understands the local realities and can cater to the needs of the institutional investors that are otherwise based in London, in New York, and other financial hubs. I think it's safe to say that the worst are behind us, and hopefully we have taken in enough lessons to stop some of the mishaps of the past from happening again. Cyprus in particular was hit probably as harsh as any country could have been hit, and the 2013 developments and the haircut of the depositors were a particularly difficult situation for the country. Now, 5 years later, we are seeing that the entire Eurozone seems to be bouncing back quite significantly. Cyprus specifically, with a 4% GDP growth rate, is doing exceptionally well. And the recent developments with the country returning to investment grade status by two global rating agencies is testament in that direction. We are also seeing the country raising capital through the sovereign bond markets, and for the first time it has managed to get a very low coupon, 2.375% for a 10-year, 1.5 billion sovereign bond issue. So when it comes to Cyprus and at different degrees for the other countries in which we do business in Europe, the situation seems to be normalizing significantly. We are indeed seeing increased investment inflows into Cyprus. We have seen very significant inflows of investments into the banking sector. The recent transaction with the acquisition of Project Helix, which is a big part of the non-performing exposures of Bank of Cyprus, by Apollo, one of the biggest private equity funds globally, is one example. The participation in the share capital of Hellenic Bank by the likes of PIMCO. The transaction is still to be completed and announced, but based on publicly available information, PIMCO will be participating in the share capital of Hellenic Bank. And keeping banks aside, we are seeing increased interest for real estate and hospitality projects. Our internal analysis team is about to release its latest macro report on the economy, and they have estimated that between now and 2024, there's at least 2 billion euros worth of inward investments simply for real estate and hospitality projects. Now, for a country whose GDP is less than 20 billion, that is a massive inward investment into the country. We have had transactions relating to non-performing exposures, and we have advised a number of inward capital providers and have also advised candidates to buy the big portfolio of non-performing exposures from the Bank of Cyprus. So it has been a very busy year, not just for Cyprus, but for the other countries in the region for banks. If I were to give you numbers, we focus on large capital transactions. And I would say that we have advised transactions, inward transactions of capital, extending well into a few billion euros within 2018, which is a testament of our ability to understand the local markets and advise the global institutional capital providers of how they should approach our region and companies and industries within the region that we cover. Cyprus has been taking significant steps in the direction of attracting participants from the funds industry. This is an effort that started in parallel with the crisis. They sometimes say that you should not let a good crisis go to waste. And this is exactly how Cyprus has approached the funds industry. Back in 2013, the CIFA, the Cyprus Investment Funds Association, commenced its operations, and sitting on the board of CIFA since that time, we have taken a number of initiatives to ensure that Cyprus gets featured prominently on the map of elite global fund jurisdictions. We have already seen tangible movement of funds into Cyprus, and over the last 3 years, 2016 to 2018, we have seen an almost 70% increase in the number of registered funds in Cyprus. So overall, the prospects are rosy. What is important though to keep in mind is that this is an ongoing effort. The fact that legislation and the fiscal and economic realities favor Cyprus as a fund jurisdiction now is something that we need to keep on working to sustain. So Cyprus needs to keep a vigilant eye, and organizations like CIFA should continue to push forward for changes to happen that will ensure that Cyprus will continue to attract investment funds. The importance that fund managers attach to this development is significant, and this can be practically viewed by the number of inward movement of funds that is taking place. Looking at the numbers that the Cypriot regulator released recently, and also with numbers that our internal analysis team, the Axia analysis and research team conducts, we are looking at a massive increase of the number of funds. Cyprus continues to be a rather small jurisdiction for funds still, but the opportunity is very significant. And legislation like the new AIF favor this direction and taking advantage of the large opportunity that exists. The existence of funds in Cyprus obviously has short-term economic benefits because they need to set up locally, they need advisors, lawyers, accountants, and that is part, if you like, of the existing model of any funds jurisdiction. But beyond that, being locally based and having access to investment opportunities locally, which we are seeing in Cyprus as well, is likely to give an additional incentive to funds that are based locally to actually make inward investments into Cyprus, which otherwise they would not have known had they been based in any other jurisdiction abroad. Axia traditionally has offered three types of services: brokerage services. So effectively, we are facilitating stock exchange trades for institutional clients, research and analysis, and investment banking services. We will continue to provide these services in 2019 with an emphasis on investment banking and primarily advisory business and research and analysis, because these are the two sectors of our business which we see the greatest opportunity. Research and analysis is actually an example of how we have utilized MiFID II in the right way, because it has enabled us to continue to provide high quality research and analysis to our clients in return for a fee, given that MiFID II required a separation between brokerage and research revenues. So looking at what to expect in the future, our investment banking will continue to be the biggest revenue generator for Axia. We expect the advisory business and the capital requirements of the region to continue to remain at high levels. So we will continue to focus there and continue to assist our clients to identify and execute capital transactions in the region. And we will continue to focus on our research, primarily because it allows us to provide a high quality output that is favored by anybody who wants to take investments considering the realities and the economic characteristics of countries like Cyprus and Portugal and Greece. In terms of geographic focus, we are very focused on ensuring that our latest geographical expansion in Italy will generate the results that are in our 3-year business plans. So we will continue to focus very strongly on Italy and Portugal. And as the opportunities unfold, we remain committed to adding local resources and local teams to the countries in the southern or the central European periphery that makes most sense.